Okay, well, it looks like we are getting to the critical mass. So again, good morning and thanks for joining us for today's webinar. My name is Edward Webb and I'm a partner in BPM's Advisory Services Group. Our topic today is managing financial anxiety, understanding the SBA loan programs, and preserving business value. There is a lot of information to cover. Things are happening today, and so we're going to have current information for you. Before I get started, there are a couple of housekeeping items that I want to cover. If you have questions, please use the Q&A function there, and we will try to get to those questions real time. Today's webinar is eligible for CPE credits. Here is what you need to do in order to take advantage of that opportunity. We will be issuing during the webinar 3 code words which you will need to write down in order to receive the CPE credit. At about 5 minutes before the end of the webinar, you will receive a SurveyMonkey link, and you'll need to type in each of the code words in order to receive CPE. The expectation is that you will complete the survey as soon as you receive it. We will only leave the survey open for about a half an hour after the class ends, and CPE will not be granted after that time. Copies of today's webinar and a recording will be made available by end of day, and we will send slides to you as well. So we have a great panel lined up for today, but before we let them introduce themselves, I want to set the stage for today's discussion. So it's only been a week since the CARES Act was signed into law, and since then, there's been an explosion of interest about the financial stimulus part of that act and its potential impact for small and mid-sized businesses. What we want to do today is bring you up to speed on what we know currently, and then we want to pivot so that we can talk about the application process and how you guys might develop strategies in order to take advantage of the plans. We also want to talk about what the valuation implications are of this, because of course we all expect the lockdown to end, and we're going to be doing business in the future, and valuation is a critical part of that. So let the panel introduce themselves, and we're going to start with Terry Hill.
Edward, thanks. Hi, everybody. Good morning. I'm Terry Hill. I'm a partner in the advisory group, and during the day, I run the firm's CFO practice.
And Kemp?
Good morning, all. Kemp Moyer. I'm a director in charge of the valuation practice here at BPM. Pleasure to speak with you all today.
All right, and then Brett Hazlett's going to introduce himself, and then he'll kind of start right into what the current status is of the programs. Brett.
Great, thanks, Edward. Good morning, everyone. My name is Brett Hazlett. I'm a director in the advisory practice as well. With a bit of background in this work, so look forward to deep diving in this with you. Spent a little bit of time at an economic nonprofit in San Francisco, so we've been getting lots of calls, so let's get right into things here. So we'll go to just an update on the 2 loan programs, which is going to be our focus for the webinar here for the most part, and then building on from that. There are 2 primary programs for small and mid-sized businesses in the CARES Act that passed. The one that's been getting all of the attention is the one for small businesses, which is the Paycheck Protection Program, or PPP. There is also a program for mid-sized businesses without a flashy title, just named the Assistance for Mid-Sized Businesses Program in the Act. So we'll talk about that in a second. But just highlighting the PPP, most of you guys have probably been following the main points of that program. So I'm going to highlight those quickly, and then we'll quickly transition to, where are we at today? What do we know? Obviously, for that program, eligible businesses have 500 employees or less. Again, there are a few exceptions, so you'll want to make sure that if you have any questions, that you're reaching out to an appropriate party there, just to make sure. But for most employers, it's 500. The loan amount based on 2.5 times your monthly payroll cost, or $10 million, whichever is lower. So for most folks, it's going to be that 2.5 times their monthly payroll costs. Just confirmed yesterday, when the loan converts, so there's no payment required immediately, but when it begins, it will have an interest rate of 1% and a maturity of 2 years. So again, the idea on this is that most of this will be forgivable, which we'll talk about just in a second. So really short-term loan, but with a really attractive interest rate. Again, they've waived a lot of the typical requirements of the SBA program, so there's no collateral and no personal guarantee required for these loans. Again, it is fully forgivable, assuming that the proceeds are used on the defined purposes and that employee and compensation levels are maintained. The defined uses include payroll costs, which is what it's based on, but also mortgage interest, rent payments, utility payments, and also other interest on debt that was acquired before February 15th of this year. And again, forgiveness based on the 8-week period after the loan date, and 75% of that amount must be spent on payroll. And if it doesn't work out that way, then there are calculations of how much the forgiveness is limited. So that's the Paycheck Protection Program. Again, we'll talk more on the status of where we stand directly in just a few minutes. Want to introduce as well the Assistance for Mid-Sized Businesses. That program is eligible for businesses over 500 but under 10,000 employees. The loans, again, will have attractive interest rates of no higher than 2%, with no payments due for the first 6 months after the loan is issued. So again, really trying to get money into businesses' hands in both of these programs at attractive rates with no payments due for at least 6 months.
Great. Next slide, please. All right, we've hit the first CPE word. You will want to write down the word loans. Okay, next slide.
Okay, so where are we at today? Probably the most important part. You guys have probably fully baked on the details at this point for the most part, but where are we at? So the banks had been waiting for the SBA to issue its final guidelines on how to interpret the CARES Act programs. Those were released to the banks late yesterday afternoon. And so the banks have quickly been scrambling to try to implement those. Some have been able to do that more rapidly than others. There is a bunch of information out there, and we know several banks have said that they will, and several have said that they won't. And when we look at the top level, you got large banks like Chase and Wells Fargo saying they're unlikely to take today. Bank of America became the first to take applications at 9 a.m. Eastern this morning. So it's a little bit all over the map. We also have information as well that's hot off the press that loans are being processed. So from the federal government, both the SBA and the Treasury, they have released statements that about $900 $900 million in loans have already been processed this morning across about 2,300 loan applications. So this is underway, but it's in fits and starts, and different banks are taking different approaches based on how quickly they were able to implement their information. So you'll hear it from me, you'll hear it from Terry. We'll continue to say this: staying close to your bank and your lender is going to be really critical in understanding their process and how to get in as soon as possible. The banks have also given some indication that they intend to apply some prioritization standards. So as you know, in the language, it's unclear if there are specific requirements around what the economic uncertainty means for businesses, but the banks that we've been talking to are indicating that they will be applying some sort of filter to the most critical, the businesses in most critical need of support. But again, that will be at a bank by bank level. The SBA did not issue any specific guidance on that yesterday. And the other big thing that came out of the SBA guidelines yesterday, while not definitive, is that they do expect further guidance regarding the affiliation or venture-backed companies to be given further consideration. And that is backed up by lots of talk from various members of the government, including the Treasury Secretary, House Speaker Pelosi, as well as House Minority Leader McCarthy, have all said that they want to see those rules relaxed for this. And given that the SBA put that they're going to look into that, we expect that there will be some relief, again, to be determined regarding affiliation rules. As we think about that mid-sized program, if you're more in that category, as of April 2nd, the U.S. Treasury has not provided any guidance or procedures to the banks for applications under that lending program. So we're still in a holding pattern on what that looks like. They've sort of worked from the top down and the bottom up. So they've got the small business out there. They've started to work with some of the airlines and cruise lines, those types of categories, to get those applications in. And so we're hoping that now that those are out, we'll start to see the fill-in on the mid-size program, over the next few days. So that's, a brief summary of where we stand today. Again, most critical really to focus on, who is your existing lender, what's your relationship with them, making sure that you're in touch with the loan officer and getting into their stack appropriately. And Terry will talk further about that as he leads you into some of the things that you can actually start to prepare for.
Thanks, Brett. Terry, if I could, there are a number of questions coming in, and I'd like to ask you to answer a couple of these as a segue in to your section. People are asking about how you define payroll costs as they pertain to PPP, how this works in terms of forgiveness, and will forgiveness be impacted if they already receive restricted government funds?
Thanks, Edward. And why don't we advance to the next couple of slides, and we'll sort of segue into that in a second. So in order, if you look at the required documentation, this is really going to come down to your payroll tax filings, 941s in most cases, and sort of stub period payroll evidence. So reporting out of your payroll system, which will aggregate the compensation for people as well as various other loaded costs. So it's the aggregated payroll, and then it's a function of that to calculate the maximum loan amount. For the forgiveness and what I'll call just the look back of things, none of that is completely written, and I think we'll see that continue to develop. But a couple things to keep in mind: until it's forgiven, of course, this is a loan and it has an interest rate and a term. And so I think people should be planning accordingly. I think we can expect that the guidance that allows for the underwriting, we'll call it with air quotes, and then the funding of this package to individual companies and organizations will be used to then sort of corroborate the use of funds so that people can evidence themselves for forgiveness, right? And I think there are decently written guidelines for how that will be clawed back at some point if the actual use of funds comes in below the funded amount. Brett, do you have any clear indication on other grants or other programs precluding the application and funding of PPP?
No, the two programs that they have released in the CARES Act that are mutually exclusive are the employee retention credits and the PPP. So if you choose to take advantage of the employee retention credits, you can't apply for the PPP, or the reverse. If you have a PPP, you cannot apply your employee retention credits. Otherwise, the programs basically work in conjunction, but there are restrictions. So you'll want to be really close to someone on what those restrictions are. It may be that you need to use the loan proceeds on different types of expenses over different time periods, et cetera. But all of the other ones do coordinate, assuming that you meet all of the restrictions and watch what you're doing.
Right. So Edward, I'll go over a few other points in the category of what to do now, right? It's Friday, things are starting to move. And so we wanted to go over very quickly a few things to keep in mind. I think the biggest item to understand is, given the way the banks are behaving, and at the time they will themselves start to begin receiving applications and processing these, you want to understand that the bank you're working with is an SBA lender to begin with and is committed to the process, right? And first and foremost, if you have a current banking relationship and that bank is an SBA lender, I don't believe you should go try and find a new lender, right? So stay focused on the people you have a relationship with. That is where they're going to begin for their clients and current borrowers. So I would stick to that to begin with. Don't get too distracted by some of the information coming in from other banks. And what we do know is that this, for each bank, these packages will be processed on a first come basis. So I would be expedient, and we'll talk in a short second about what to provide, but get a packet in as soon as you can. So in the middle of the slide, we go over a couple of what I'm just going to call minimally viable things to gather right now. And of course, if a relationship manager at your bank asks for more material, you should be prepared to give it to them. But what we know today is that obviously beyond the SBA application itself, you want to put together a calculation of the actual loan amount, right? And we've seen a number of iterations of this. So do it yourself or get some outside help, but have a clear story told around what the amount is and why. And as backup for that, you'll want to provide the actual payroll evidence in the form of tax returns, and in some cases, actual corporate tax returns. So on the safe side, if you can generate both and have both prepared for 19 and one prior year, that's a good start. The other thing you're going to want to do, as much data as you have, we're into April now, so you may be able to do all of March or almost all of March, get the stub period payroll records pulled as well from your provider, right? So with the actual tax return for 19 and those, you'll have good evidence of the payroll burden and cost. The last thing I'll mention is, if you are currently have, let's say, a single or only two bank relationships, neither of which are with an SBA lender, and you are interested in engaging with an SBA lender with whom you don't have a current relationship in, you'll want to provide a little bit more background on the company itself, such as articles, bylaws, statement of good standing, et cetera, so that the bank who doesn't yet know you can begin the process. Even though the SBA is being generous, the bank will still need to have their head wrapped around who you are beyond just the payroll evidence.
Thanks, Terry. There are a number of questions coming in about affiliated companies and venture-backed. What can you share on that?
Well, we can share its emotion, right? As of the last 24 hours, there's been a lot of conversation about trying to treat an aggregated portfolio as a venture fund or a private equity fund as separate entities. And if you sort of play that out, then you have other kinds of structures that might very well claim they could be looked at as separate entities. So it is really one of the things that's in motion and probably the crux of the very eligibility for a lot of companies. I think for the sort of swift and cautious approach, getting an application in does no harm. And so for people who are interested, I think proceeding forward is a good thing, but understand that the real rubber on the road with respect to how a 500 employee eligibility really gets considered is still a bit vague. And that would apply to venture-backed, private equity-backed, US-based multinationals, foreign nationals with national corporations with US entities. So all of that is going to be sort of in the sights of that fully baked consideration from the SBA and how the banks interpret that. I think the cautious approach is to get an application in and then see how the qualification process goes.
Good.
And I'll mention a few things that we can come back to later, but one other tactical thing. So because this is a loan and because you're going to want to be prepared to corroborate the use of funds for forgiveness, there have been a couple of sort of considerations around how to do that, how to keep the record keeping. I think the best thing to do is in your general ledger system, in your ERP, establish an easy place to put all of these costs and spends, right? So in QuickBooks, you can create a class. In other things, you can create layers or other kinds of buckets, I'll call them, for keeping track of things. That's going to make your life a lot easier when it comes time to corroborate how you're forgiven. And then the last thing I'll just say is this SBA program is going to come, it's going to get funded, and then folks that receive those monies are going to start using the money. It's really, really important in this moment to try and plan ahead a little bit. And we're going to talk kind of beyond the SBA later in the hour. But I want to introduce the notion of something sort of obvious, but important to keep a head about. 2.5 months of payroll is obviously not a 2.5 months run rate for your business. So having good cash management and financial planning tools at your disposal or building them now is going to serve everyone well as we get through the maturity of the time we're in, as well as the SBA funding itself. And we'll talk about that a little bit more later.
Thanks, Terry. That is a really important point. Kemp, I'm going to come to you here in a minute, but there are a couple of questions that have popped up that I need to ask Brett. Brett, specifically, people are asking questions about how they determine payroll. What does that look like? For example, if you've got a business owner and they're taking the majority of their salary as distribution, what does that mean in terms of a determination of the loan amount for them?
Sure. So if you are a sole proprietor, net earnings can be used as your payroll calculation. If you are the owner of a business and are not taking a salary, an owner's draw would not be considered as part of the payroll amount. That is sort of the quick guidance there, Edward.
Okay, good. And can you talk at all about retention credits and what that might mean relative to the PPP?
Sure. Again, those are the employee retention credits are the one piece approved under the CARES Act that cannot be used in coordination with a PPP. So you must choose one lane or the other, one program or the other, and that will be the choice you have for those. The employee, and again, our tax folks will have a lot more information on this. The employee retention credit, I believe you'll have more time to get those ready. That will be for this tax year. So you can apply for the PPP. If you don't receive it, then you would still be eligible to get the employee retention credits if you were to meet the requirements for that program. So for most people, it's going to make sense to try to apply for the PPP if they think they are eligible and use the employee retention credits as a backup. But obviously you would need to do the detailed calculations to make sure that that makes sense for your situation.
Thanks. Okay, Kemp, as promised, it would be great if you could help people. Oh, wait, we've got another CPE word, valuation. Okay, so write that down. Okay, we can move to the next slide. So Kemp, help people understand what they're going through right now and how the PPP program can influence long-term valuation and what this might look like as we all emerge from this problem.
You know, thank you, Edward, and happy to do so. Before kind of getting into some of the details or nuts and bolts, I just kind of wanted to take a moment to step back a level and just kind of the concept of valuation. What does that mean? And I kind of want to provide just a quick and simple summary. And where I talk about valuation for businesses, I also want to, I know we have quite a bit of nonprofit folks on the line as well. So just think of program vitality, future capability for your program. In terms of, as we look at an enterprise value of a business, it's essentially, to boil it all the way down, is two pieces. You have a perception of the future cash flow of the business, the cash generating capability, and that's over the perceptions of risk. So obviously, as we stand here today with the COVID-19, we're seeing impacts to both the numerator and the denominator. Cash flow is being impacted, and perceptions of risk and actual risks are going up. So how do we today start to minimize that impact and start to look both tactically and strategically at, how do we get out of this in the future? So Maggie, if you could pop to the second slide there. So we obviously, we've been talking quite a bit here about the SBA program, and that is a key tactic right now. Is it a tactic that is going to be available for many businesses, many nonprofits as well? So that is an opportunity you'd like to take advantage of, immediately. But we also want to keep that in context of other considerations. Up top here, obviously the short-term funding to bridge the acute period is paramount. We have a very acute set of circumstances here with an unknown timetable and an unknown depth as well. So we do want to take advantage of every opportunity to kind of get over that more acute bridge. As Brett and Terry have spoken to previously, is have your paperwork, your documents, your processes, in order. You want to have them streamlined. You want to be able to take advantage of the funding sources. And Terry did mention it as well, but kind of having that evidence compiled as crisp and clear as possible to make sure that you can take advantage of this bridge over the most challenging waters. Two, just, this is probably a practice that is going to be good, in tough times or also in positive times. So we want to get some things going now that'll again bridge this immediate need, but also set the stage for rapid expansion for when things get settle in. To those end, establishing a rolling weekly, monthly, quarterly cash projection, essentially an FP&A function This will help you keep a pulse of your business in the short term. And also it can, again, serve more of a longer term purpose of becoming both a tactical and a strategic driver. So whether you have folks internally that can, develop that and hone in on that, it's really important time. Otherwise, it might be good to reach out to experts that can help with that. And it's going to be a key piece to, again, keep that pulse on your business. Third here is just kind of assessing the short-term opportunities. We do participate in a very dynamic economy. The wheels don't always churn quickly, but sometimes they can churn quickly, and we see that. Are there different delivery models that your business can take advantage of? We see that here in the state of California. They opened up the ability to deliver, alcoholic beverages, and I know many, restaurants, bars in my area have taken advantage of that. And that's more of just, an example, but are there certain ways that you can help kind of unpack or unclog the kind of the hold up here? And then kind of fourth really is, we're obviously facing a situation where cash is king. So, and there might be some kind of belt tightening that has to happen around certain areas, but we have key people and we do want to keep them with us and have them be fully motivated and have that, skin in the game, so to speak. So it could be an actual opportune time to look at certain non-cash compensation. Internal Revenue Code Section 49A, could be a good time to look at options. And when value is potentially impacted to the downside, it can actually, again, create upside opportunities, and especially as we get out of this acute period. So while it might be a small silver lining, there are potential silver linings here, and it may be a time to look at that sort of non-cash compensation. If we could pop to the next slide, that'd be great. And then, longer term, we obviously have the SBA program, again, that we're highly focused on in the short term and getting over that bridge. And it may feel like a bit of a sprint right now. And I don't know if it's a marathon, but I think the way I would look at it is really more like a steeplechase right now. We're getting ready to get out of the blocks, and we're going to be running for a while, but there are going to be hurdles. There are going to be, little ponds along the way. We are running a unique race right now, and it's going to be important to stay focused on the short term as well as keeping our eyes on the long-term ball. So again, SBA, it's a tactic, but not a strategy. So we want to be able to take time to step back and really be focused on, what was our strategy before, and then how has this changed it? Has it only, created a short-term kind of bump in the road that we need to get over, or are there going to be more kind of structural changes that we do need to assess and understand how we can, maximize opportunity on the back end of this? We all know here, business relationships are always key for so many of our businesses, but especially in this time as we, deal with the acute phase and then get ready to, restore the normalcy and the long-term growth. I would encourage, all the business leaders, on this call to, maintain those touch points. If anything, ramp them up. Your key customers, analyzing accounts, getting in touch with those people, reiterating how important they are to you, getting to hear what their needs are and empathizing with them. We're all in this together ultimately, and just connecting and showing that empathy. I think it'll help your business. It can help your customers' businesses, and it's really a key time to do that. Additionally, your people are going to be anxious right now. It's just the way it is. A lot of anxiety out there. So, we as leaders need to play even more of an important role in their life right now and help them, manage this process. And again, it'll pay off in the long run, the better we manage it now. And then third, too, is the key third-party business relationships. Many on the call, on the webinar already have spoken about the relationships with banks. You want to, maximize that opportunity to work with those you've been close with. And that goes beyond just banking. I mean, that's your financial services, your suppliers. There are a lot of nuances for how we can handle this, both to minimize the short-term impact as well as maximize the long-term potential. So I hope that we all take this opportunity to do that. And then again, just continue to focus on your core. There's a lot of distraction right now, obviously, and a lot going on that's outside of kind of what the core functionality is. But those key elements of, you know, what is it that's fundamental to your business, and how do we make sure that we keep our eye on that ball as well, even as we take care of these key tactics to bridge the gap. Another thing I spoke to about the short-term modeling, kind of the FP&A function. Hopefully that's something that can get established now and then help develop a better long-term functionality. And this kind of segues into the final point where you're going to have to look at and understand other financing options. Right now, everyone is rushing to the doors of the SBA banks. It's going to be a little bit of chaos for some period of time. That's just the way these things are. And there's going to be a line at the door. And again, that's a very, Terry mentioned it, it's a 2.5-month period. So we need to also be aware and start the wheels churning of what are those other financing options that can help us get us through more of an intermediate term period. And there's probably likely not going to be as long of a line in some of those segments. So again, how do we evidence the market? How do we evidence to those sources of funding that our business, yes, we might have a little bit of a short-term kind of bump in the road, but long-term, we have a plan. Long-term, we know we will be able to generate these cash flows. Long-term risk is less than short-term risk. So how do we take advantage of those opportunities? And presenting a well-established, well-conceived, well-thought-out picture, a composed picture, is going to be critical to landing that funding that's beyond just the tactical SBA. So hopefully these are things that can, you know, put this in context and be of a value to help restore that long-term value creation.
Thanks, Kemp. That's great. Really appreciate it. We got to get back to some of these questions. There have been a number of questions coming down about the relationship between PPP and real estate companies. Terry, are you able to speak to this? What are you hearing about in the marketplace?
Well, and I may have Brett back me up on this, but there seems to be some hidden language that may, depending on the type of business that real estate companies are engaged in, there may be an exclusion where they are ineligible. But again, without being a lawyer, the interpretation of all that is really going to be critical, and I think the rubber is going to meet the road with the banks. And how they qualify these loans. But Brett, do you have any more color on how that's going to actually get transacted and how these real estate companies are going to be considered for the application process?
Yeah, I don't, Terry. As you talked about, there are guidelines for existing SBA lenders under the 7A program, which seem to indicate that certain real estate companies, based on the type of activity that they are doing, may be excluded. So again, this is one of those reasons to be really close to your bank and your lender. They, particularly if they're an existing SBA lender, will have a lot of insight into those specific exclusions.
We're getting a number of questions regarding what happens if single owners have multiple companies. Is that one PP application or two? Brett?
That's a great question. I think part of that will be defined, you know, by the SBA under the updated affiliation rules that they are intending to release. The other piece of that, I would say, is obviously if you've got separate tax IDs, you can apply separately. You'll need to provide some clarification if the owner is more than a 20% owner of each of those. It is required in the application that you provide some additional clarification. So you'll just want to have a clear definition of exactly, you know, what that owner's piece is of each business, how the businesses might be related or not, and that will help the lender make a determination on whether those should be combined or not.
Terry, from a kind of a tactical point of view, would it make sense for companies to make multiple applications at different institutions, in your estimation?
Well, I would say that if everything is ready to go, the practically speaking, it probably doesn't hurt. But remember that all the feedback we're getting in the market is that the banks themselves will start with current borrower relationships, and so your position in the queue, as it were, will be informed by if that's a net new relationship for you. So if you have multiple accounts and multiple lines of credit with existing banks, that may very well be a good thing to do, given the I'll just call it the timing of when the bank's risk management team perceives that it's okay to go forward with this. And some banks are being more aggressive than others. And so not all the banks are going to go out at the same time. And that's probably the most important thing to understand. So lots of communication is good in this case.
Mm-hmm.
Yeah, and I would just add, Edward, the critical part there, obviously, if some banks are already funding quickly, you can only have one PPP loan, just as a reminder to the group here. So it would be possible that if you applied multiple places and they happen to process quickly, you would get to, and so you would need to make sure that you obviously get with one of those banks and cancel that quickly. So not knowing the process, you just would need to stay on top of that if you do put multiple applications in.
I think it makes sense, if you would, Brett, to walk through the calculation of the loan ask and what the payroll is comprised of, so that people understand how this might apply in their specific circumstance.
Sure. So there's really two pieces to that, as Edward described. There's what's included, and then what time period do we look at. So what costs are included in payroll? That includes traditional things like salary, wage, commission, cash tips, and those types of things, but also includes other pieces such as group healthcare benefits, insurance premiums associated with that, retirement plan benefits paid by the employer, as well as any state and local taxes that are assessed based on the compensation level of the employee. So in this case, if for most of the folks that are on from California, that would include things like UI, SDI, and ETT. So your unemployment insurance, your state disability insurance, and your training tax. And other states have similar types of programs that they apply. And so those would all be includable in the definition of payroll costs. Now, the time period that you calculate this over depends. For most folks, it will be calendar year 2019. And you're going to take your annualized costs, making sure to cap them at $100,000 for any individual employee who is over that threshold, summing that number and dividing by 12 to come up with a monthly amount. To the extent that you have not been in business, that you weren't in business in 2019 and were only in business this year, you can use January and February payroll to do the same calculation. Or if you were a seasonal employer, you can use February 15th, 2019 to June 30th, 2019 as your payroll periods. So for most folks, it'll be calendar year 2019. There are a couple of exceptions if you're a newer business or you're a seasonal business.
And Brett, one of the other questions was workers' comp, included or not included in the calc?
It does not appear to be includable in that, based on the definitions that I've seen. I haven't seen that in the specific regulations, and I've not heard anyone else talk about that as being one of the things that can be included.
Thanks, Brett. I appreciate it, and that was a really thorough response. To the listeners out there, if the circumstances that you have was not covered in that response, please reach out to us. We're happy to address that. We want to make sure that you guys are comfortable in understanding how to create your ask for the loans. Terry, I know you spoke of it a little bit, but talk a little bit more about the institutions that are current SBA lenders and those that are not. Who's able to do it and who's not, and what are your expectations in terms of how those banks are going to behave?
Sorry, I was on mute. I think that the overall message is probably a little bit of buyer beware. The guidance from the legislation and from the SBA allows for a great number of institutions, fintech companies, and others to be able to offer this. That neither means that they're able to take an application quickly, nor does it mean that they understand the SBA process. So I think that staying very, very focused on, number one, who you have a relationship with today, and then number two, who are existing SBA 7A lenders who know the SBA process and are committed to getting through it. I think that's where you focus. The oversubscription of interest, I think, will quickly have applications begin to consume the total amount of the $350 roughly $1 billion. And so having a delay by a fintech supplier or someone else who said they can do it and perhaps may need a week or two or more to get through the SBA process themselves may delay you past the window of actually getting funded. So I would stay focused, and I might, again, start with your current bank, talk through what they're doing, and then if not, understand who existing and skilled SBA lenders are who are committed to the SBA process and focus on those.
So Terry, just kind of a follow-up to that one. If you have a relationship with a bank and they understand your financial circumstances and they see the difficulty that your company is having, could that impact the decisions on forgiveness, or are those determined by the plan and the statute itself?
Well, it's a good question. The language about an adverse impact and to uncertainty and to really eligibility is a little bit open, and so I think we're going to find once the first wave of funding happens, there's going to be a little more guidance around the actual forgivability and the loan converting into really what is a grant. I think that if you have a current lender that you have a relationship with, they're going to be interested in you. And I think that if they are a lender committed to the SBA process, they will have built their own interpretations and guide you well in how to see that and really how to understand the likelihood of forgiveness when it comes time to have that loan convert.
Good. Thank you. Brett, what about guaranteed payments to partners? How might that be termed in the context of forgiveness?
In terms of whether those costs could be included in the forgiveness amount,
yes.
It does not appear that guaranteed payments to partners would be included. Again, if it's a business that has employees and therefore pays salaries to folks, it would need to be salaried wages that would be included in a 941. Again, for sole proprietors, they can include their owner draws, but it does not. to me, it seems that partner distributions would fit into the category of likely not being includable.
All right. What about Social Security and Medicare tax costs? Are they going to be includable for calculating PPP?
They are not includable. So the employer portion is not includable. Obviously, the employee's portion is part of their gross wages, so that is includable, just to define that distinction. But the employer paid payroll taxes at the federal level are not includable. However, again, they are at the state and local level.
All right. Can you review how the $100,000 cap? There are a number of questions that have come in about that. How is the $100,000 cap applied, and what does it mean from a practical standpoint, both in terms of calculating the loan amount and in determining the forgivable portion?
Right. So in calculating the loan amount, the $100,000 cap is a cap on compensation. So the wages and salary portion would be capped at 100. As written, group health benefits, retirement benefits, etc., are not included in that cap. However, again, a lot of this work is going to be done at the bank level, and their interpretation of that may be that really the distinction here is not for highly paid employees to be included. So I would just be prepped to have your backup ready to go in case you needed to do that. But as written, it is only on compensation. As it applies to forgiveness, the $100,000 cap is still the same. When you calculate the amount of payroll costs over the 8-week period following the loan amount, you can include no more than an annualized $100,000 amount for that employee. So that means $8,333 per month. So basically $16,666 over those 8 weeks would be the max that you could include for an employee that earns an annualized salary of over $100,000.
Mm-hmm. Okay. Terry, are there specific plans or specific treatment that you're aware of regarding businesses that are deemed essential?
Well, it's a good question. So there doesn't seem to be, that I know of, special treatment at this point in the SBA or the CARES Act guidance. However, banks may very well apply their own ranking criteria for how to underwrite, again, air quotes, underwrite these businesses and organizations. I have heard some evidence from the field that essential / minority-owned businesses are giving consideration, but there's no guidance for that we've seen written today. It's going to be more of a bank level decision and how they treat the volume of applications coming into them as a bank.
Okay. Brett, we've got a question here. You had mentioned that self-employed individuals can count if owner draw is deemed payroll. Does this mean that an individual filing a Schedule C can include his or her gross receipts as payroll?
Yeah, to the extent that those are 1099. Well, it actually says net earnings, so I would actually think it would not be the gross receipts portion. I would think that it would be the net earnings at the bottom of a Schedule C. So I would assume it's not gross receipts. I would assume it's net earnings as they've defined it.
Okay. We have about 5 minutes left. on the calendar. I want to give you guys an opportunity to offer a final word or thought on this. And Terry, let's start with you. You know, here we sit. What's the one message we'd like to leave people with this morning?
Well, I think, thank you. I think that this is all going to impact various organizations very, very differently, right? A venture-backed business that has well capitalized will have a different experience than a principally held business that is in a more near-term situation. So I think what I would do is sort of advise everyone to be smart and efficient with the SBA program and get an application in if you think that you qualify. But try as much as you can to inform all of that with the strategy that you had coming in. And if the strategy has existentially changed because of what we're all going through, get some outside help to understand what that means. But as much as you can, try to focus on the core, as we said in one of the slides, stay close to vendors, clients, and people. And as much as you can, understand that the strategy you had before probably provides a lot of context for what to do today, and that SBA is a tool, but there's certainly going to be life beyond the SBA. So try to think holistically if you're able.
Thanks, Terry. Brett, a word or two from you?
Sure. Thanks, Edward. Yeah, again, everything Terry said there is great. I would just echo that, you know, being really close to lenders, as noted even this morning with sort of the mess that we've seen across the banks, is that this is not, you know, well defined yet. You know, we're giving you our best take on this, given you know the information that we've been able to review. The banks are just getting that information as well. So really staying close and keeping that relationship tight is important. But again, this is just one piece of the puzzle. So I think that Terry stated that well. You know, this may get you through a short-term piece, which is great, and keep focused on that quickly. But, you know, keep your eye on the horizon as well, and being sure that you're thinking about what happens after this.
Thanks, Brett. And Kemp, we'll give you a minute to talk about value, my friend.
Yeah, and I mean, just kind of echoing what Terry and Brett have said, yeah, I think it's key to have more than one iron in the fire right now. So make sure you're taking as much advantage of the SBA program as possible and moving as rapidly and efficiently as possible to that. But understand there's going to be, you know, potentially other needs, potentially other sources, and don't necessarily focus all of your attention on that one path. Broaden that out, and then just stay close to your people, stay connected. Relationships matter even more right now. So whether that's internal, external, third party, stay close.
All right, thank you, Kemp. I would say, guys, before I give you your third keyword, which is I know what everybody's waiting for here, that there have been many more questions that have come in than we could answer. Some of them are very detailed and very specific to your situation. We will attempt to answer as many as we can and send responses out. A copy or a copy of this recording is going to be made available, and we encourage you to reach out and give us a call. We would be happy to talk about your specific situation. Okay, your CPE word number 3 is financing. And I need to say, you will be receiving an email from Joel Segovia at BPM shortly. This contains a link to a SurveyMonkey survey. You need to put those code words in the order in which they were given. You need to complete this right away, as we are going to be closing the survey within a half hour after the end of this session. And no CPE will be granted at that time. Thank you very much. We were delighted to have you with us this morning. go out and be safe and happy weekend.
Thanks, everybody.